Hey guys, this is John. Welcome to the free video. Couple of charts that we want to review as we head into the weekend and get prepared for next week. Namely the yen and the euro and what that means. So you can see here the yen, a little bit of free fall this week. We got a big daily squeeze setting up. And what does this mean? Okay, and we come back here. This was kind of the little panic. The S&Ps fell. There's a little bit of flight to quality, and now things are rolling over in a big way. All right, well, what does that mean? Well, now we got to take a look at the euro. And this, I just got back from Europe. It was great. It was cheap. And you can see here that the euro is on track to come and take out these lows. And I actually think that the euro is going to be under par against the dollar here. We flash forward a couple of months. So what does this mean? There is a war going on right now in the world. And it's not, there obviously are military conflicts going on in the world, but the biggest wars going on right now are economic. Okay, and at this point, it's a race to the bottom. The country with the cheapest currency wins. Now, you might think that it'd be surprising to see that the euro is heading lower in that regard, and the dollar is heading higher. Obviously, the dollar is going to be priced higher than the euro. But the U.S. actually has a very strong reason for a dollar to be strong, but not too strong. Okay, and there's a couple reasons for this, and I talked about this, way back here, going, look, we're looking for a higher dollar. One, they actually want to push the price of oil down because that helps contain Russia. If Russia has good cash flow, they're going to do things like they invade the Ukraine, right? But two, strong dollar also is actually decent for the bond market, and they've got to keep that up because they're not going to raise rates. They can't afford to raise rates right now. If you guys didn't know this, in like 2000, we had $4 trillion in debt, and we had a $400 billion a year interest payment. Here we are in 2015, we got $18 trillion in debt, and guess what? Because of the low interest rates, it's still $400 billion a year in interest. We're not going to raise rates. Politicians at this point, they know if they raise rates and suddenly, instead of a $400 billion interest payment, we got an $800 billion interest payment, they got to raise taxes, and guess what? They're going to lose their jobs, okay? And they don't want to do that. So it's a mess. The central banks are controlling everything. They're trying to, the Japanese bank is trying to make sure that the yen stays low, to make sure that their goods are cheaper for export. The European Union is doing the same thing. They must have a weaker currency. They will not admit it, but obviously the markets spoke this week, okay? So how do you look at all this? Well, the big thing that's going on right now is the idea that, are we in inflation because of all the the world's awash in this currency, or are we headed towards inflation? So the good news is it's actually very easy to tell. On a monthly chart of a 30-year bond, at some point, okay, we just don't know when yet, but all you got to look at is just follow this trend line, okay? And at the moment that this trend line breaks, that means we're 6 months away from inflation. So there's actually plenty of time to get your portfolios positioned, et cetera, et cetera. But to make those bets now is futile, because bonds could keep going higher, right? Right now, the world is awash in cash, and it's, when you see things rising like college tuition, it's not so much that the price is rising, it's that the dollar is getting more worthless because of the deflation that's going on. And if you understand how to navigate these markets, you're going to be a winner. And if you don't understand what's going on, you are going to get your clock cleaned, for lack of a better word. So to that end, Don, Bruce, and myself are going to be doing a class Saturday, which is October 24th. So if you're seeing this Friday night, that's on Saturday. If you're seeing this on Sunday, the class has already happened, but you can still get the recording. simpleroptions.com/professional, and that's the phone number there at the office if you're getting this. But so it's going to be myself, Don, and Bruce. And really, what I would encourage you to do is, on a Saturday class, the goal is to provide enough information that the following week, trading a one lot, you can recoup this investment. Okay, it's deliberately low priced. And this will be from 2 to 6 o'clock East Coast time. Don and Bruce and I are all going to talk about just kind of what's going on in the world and how to take advantage of it and how to understand it using the concepts of direction, which is what I focus on, volatility, which is what Don focuses on, and income, which is what Bruce focuses on, okay? And then the most popular thing we do is then we follow up with live trading. That's a $9.97 option that includes this. But you know what? For something like this, because it's a little different, if you're interested in it, just do this. You can, I mean, look, you can upgrade to this for no extra cost. I mean, it'll, whatever, the same price. You'll have that opportunity on Saturday. This way you can at least check it out. And if this is something that you want to do, we're just going to do it the following week. And then we've had a couple of people ask about our Las Vegas event. The November event, which is coming up, is sold out. But we've had a lot of people asking about, gosh, they really want to do it. They want to kind of do that live event. It's more one-on-one and just more kind of the overall encompassing, like as a mentoring type program, like, hey, what do we do for 2016 and how do we do this? And this will be at the end of January. If that's something that appeals to you, you can sign up for this now, and then you get this and this included. Okay, so that's that. simpleroptions.com/professional, and looking forward to seeing you there. You guys have a good rest of the weekend, and we'll see you at the next update.